I have been writing this, being I know it's got loads. Okay, yeah. I would probably get context of what all those spelling mistakes are if I read it over, but I'm not going to because I have been typing that since probably about 12:30, and it's now 2:15. Um, so yeah, this is the finalized result anyway. Instead of all the uh, complaints, it is what it is. Just got to keep pushing with the work. It's a lot of work. It's mainly the writing that's a lot of work, but that's what keeps you up with on the ball with how to discern the way multiple in any time frame chart perspectives trend in players set up and how it's likely to continue to prevail, like based on the intent uh, displayed. Um, and whether the intent displayed is set up the relative time frame chart perspective in the particular fashion where where whatever previous atom push was in play, whatever is likely to be either done, or it's likely to be continue, or it's likely to keep pushing for a few more bars. But you would have to basically see how recent bars close, like how the next few bars close, like what would contribute to however the push is likely to continue to push, like. Yeah, so just basically flowing with the market. There's many situations that can unfold, and what matters ultimately is what sets up. But anyway, what I concluded is I'm not gonna have any like different approach to enter because I know deep down that keeping it simple is most optimal, and that what I'm currently doing now fits the socket correctly. Meaning, like, there's like what I'm doing now just gels with me to the utmost degree. And so, if anything, to increase the trade frequency, what I think I could do is just not hunt for an intra-session liquidity sweep. So, like just like do everything the same, like hunt the most probable direction poised to prevail over the particular key time period based on how a wide array of time frame chart perspectives in play trends are set up and how they're set to continue to push, like in whether the way participants have traded like over the past time durations comprising whatever trend you're looking at is set up to push off the sort which looks done pushing or not done pushing, and that momentum's likely to keep continuing and basically determine how that next in play bar is said to push, like primarily unfold, like, sorry. So the way I concluded what we could do, instead of looking for like BS type things, like for example that 5M thing, that's just like a no go. I'm just not going there. It just doesn't make any sense whatsoever. But what it does is you could just simply like wait for the. So obviously I've already done the analysis. You could go and look at it, and no one's probably gonna watch this anyway. But this is just for my own self to look back at. But you could. So we had the direction post to primarily push lower over European morning trading session yesterday, which we had done in advance, right? Now in a way to increase trade frequency could be to simply not look for the intra-session liquidity sweep, because we obviously we obviously must need a playable range to enter to look for a setup on, and for the playable range relative to either the 1 hour or the 15 minute to not be closed in before we look for a setup. So that would all be the same, but just instead of looking for the intra-session liquidity sweep, for example, Asia high and then a 15M nice bar close, or Frankfurt or London, is simply just wait for an anatomic bar close, because that would naturally encapsulate the occasions where I'm just thinking though, because it might not, because I'm just thinking, like, for example, if you got in on this bar, which would be where you would get in if you followed this method, I'm probably just going to keep everything the same for London, I can't lie. But like if you did get in here, like the market could then come up and then gain momentum and then hit your stop, and then you get an entry where you normally would about here, and then you catch the trend. But then you were on side to the trend, but you got stopped out and missed it, because if you did enter here, your stop loss would be like you don't really want to stop that big, right? I mean, relative to the situation at hand, you would probably want it. That looks so bad having you stop there. To be fair, actually, I probably would have it about here. I can't lie. Um, you really wouldn't want it like here. It could easily wake up. It's only 20 pips. So to be fair, yeah, I mean 25 is this. You wouldn't really want it there. You'd probably want it about there. So yeah, I still am not comfortable with this, and rather like to keep it the same. So that is probably what I'm gonna do. But I'm just gonna be aware of like future cases where like that happens, because I'm pretty sure we had a sell bias here. I can't remember if I'm that clear, but I'm pretty sure we actually no. I don't think we did here have a sell bias. I think we did here, and you wouldn't have got in anything here. And actually, you might have if you had a sell bias right off the bat. But I can't be bothered to go and look. But all you would be doing is just look at how each of the trends are set up as a 7, and whether this poised to keep pushing in, or likely to reverse and then trade lower, for example, as of 7 a.m. and then look for a setup, and then if see the 1 hour setup appropriately. But I do know that GU set up nice, and I missed this trade. So this just delineates where I was wanting to see a 1 hour bar close in US session yesterday. Yeah, it was here. This was the trade which we got the intra-session liquidity sweep, right? And yeah, in the bar that gave the intra-session liquidity sweep formed as the anatomic bar close, right? Because we're waiting for the first 1 hour bar to close, and then what I'm now referring to about possibly doing to increase trade frequency, which probably would result in more losses, but maybe small gain. I'll have to see. You'd be following the same protocol anyway. You just wouldn't be looking for in ISLQS. You would simply be looking for a sufficient anatomic bar close once the 1 hour set up appropriately, once you've got that playable range relative to the 15-minute or the 1 hour, and then you naturally get this anyway, because you'd be waiting for the 1 hour bar close, right? And then you get that sufficient anatomic bar close. Like, this trade was literally sexy. Like, it was literally just brilliant. It was fantastic. Here we also had a buy bias, a long bias, I should say, or buy side bias, whatever. But and in US session, this is what I do, right? So, yeah, but we had no anatomic bar close, so no trade. But like the playable range, I'm pretty sure was also like from here to here or something like that. It probably would be based on how this move would look like on the 1 hour. It'd be like one straight move, which would be the previous and push, which is the playable range. But off the top of my head, I'm pretty sure we've definitely. I can go and I can just scan through the past few days. Maybe it's not. Maybe it's on a day. Maybe it's on. No, so I know that this was the GU day. Well, we missed the GU trade. I'm pretty sure. I can't remember. I'll quickly do this day. I'm pretty sure we didn't have a sell bias on this day. But then what I may as well do is break down how the market's actually set up for today's US morning trading session. So it's really taking a beating. But this move would be better looked at on the monthly, for example, which is kind of in its newly emerging stages and is nowhere near being done. So it's like, yeah, these lower time frame chart perspectives have been just consistently pushing lower, and many people even started to get bullish around this area. I'm pretty sure it was something like that, because I was in a particular group and they just kept longing and they just kept going up. They were like, they were just on the wrong side of the market because they weren't looking at the higher time frames. They had just started to like emerge in a fashion where like a newly emerging push where it's like it's like erratic. It's got a lot of energy. It's new. It's like uh, it's got a lot of momentum behind it. Like when a new push emerges, it's got a lot of momentum, but like as it progresses, it cools off, right? But so you got this is why you got to be aware of all your time frames. But like it's also remember you're just being aware of them as of the most recent key time period. You're not looking to trade at you're not looking to predict the most probable movement out of every single point in the day. You would literally implode, and I almost implode anyway for the key time periods, let alone looking for all of the things. But anyway, you get the gist. So like here, like I remember people started to kind of get bullish here, right at the very highs, man. People, that was just insane. Like, I mean, of course it could keep pushing, but look at the way the market started to trade. Like, it's like, really, you want to be bullish here? Oh, I mean, look at this at hand push. You got this push, higher, lower, push up to the upside. This was your previous at hand push. This came to an end. It looked a bit iffy here, like it could still probably be in place, so it looked unclear, iffy, meaning like you would want to check next step lower time frames, etc. So relative to the initial time frame chart perspective, you couldn't really make anything out of it. But as of this most recent bar close, you certainly could, and people were bullish here. Like that's insane. I mean, this trend looked like it came to an end, and this looked like a newly emerging push, which had a non-sufficient candle quality, meaning it's likely to keep expanding outwards lower for it to form a sufficient candle quantity, for it to look like it's potentially done, and it's nowhere near that. So it's likely to just keep, like proper rally lower. Of course, it could form it to wick and then primarily push lower, but to be fair, you would use the next step lower time frames to back that up. But anyway, yeah, we'll quickly just do as of the 20th. So you'd be looking as of the 19th, just to see this, because I mean, look at this. Like it really was iffy this week. It was an awful week to trade. I mean, I would have capitalized on GU, and I really got unlucky on EU. But even so, I'm still kind of proud of myself to some degree that, like, yeah, okay, I still had that bias. Though I missed GU because I was writing, which like I cannot do that before session. I'll miss trades doing that. But I arrived at the bias that was happened to be correct. But anyway, I'm gonna end up missing this training session if I don't stop. So we're doing London, so we don't look at the 16-hour for London's. But anyway, so you would be looking, if you're doing the 19th, you'd be looking at the 18th bar close. So yeah, I remember this day. It was quite iffy, to be fair. Okay. So the daily, if we'll remember, it was like a wick rejection right at the very lows of a healthy candle quantity push to the downside, meaning like the market's, or it's like well established that the market's already been primarily pushing to the downside and it's overextended and it's sat right at the very lows. And the way participants traded like over the previous day time period is a bit iffy to go short on. So I'm like you see here, I'm being completely realistic as of how the market was set up as of the subsequent in-play bar relative to the time from chart perspective that encapsulates the given day's trading period. So I'm not like, this is how I do it real time. Anyway, the 12-hour with how the daily was set up looks kind of bullish, but just based on short-term structure. Like if you look this, you got to push lower, push higher, push lower, push higher. You're above this short-term structure high. This is like the scenario where you've got a big, for example, bold looking tree that's very big and tall, and it's like very wide, and it looks very sturdy on the outside. But for all you know, if you don't know the inside of how that tree is comprised and how it's held up, it could be ready to fall over at any point. So what I'm referring to is this trend that we see relative to the 12-hour intent. Like, yes, it's been pushing to the upside, but based on how that intent to trade is view it has unfolded like on a few next step lower time frames, what comprises the way this trend set up like suggests how the reality of how the 12-hour set up basically. So the 8-hour. Oh wow. Yeah, so we're doing the 19th. Holy shit. I think I was honestly a bit clouded too on this day. But if you look at the short term structure, you've got push lower, push higher, short term structure, wick rejection, this bar close. It looks great to push lower. 7-hour, you'd obviously want to keep checking all your time frames. So, wow. Is that the 19th? Oh my goodness. I think I might have had a sell bias on this day. I can't remember. I'm not sure, but relative to short term, you will have to be aware as well of that. Any bullish sign on the next step lower time frames with how the 12-hour and daily set up, like being right at the very lows of an already pushed push, and that like participants' intent may be not of the sort that they're willing to continue trading to the downside relative to daily time frames. Yes, it looks like they are relative to 7-hour, but the higher time frames invariably dictate the uh, the direction that's likely to actually prevail over like to dictate how the next step lower time frames unfold like. So yeah, as of now it looks good to push lower. The 4-hour, oh my goodness, holy shit, I must have had a sell bias on this day. I'm gonna have to look. I'm gonna look on here. So this was the 20th. Let's have a look, just because if I didn't have a sell bias, that is worrying. So the 20th. Uh, hmm. Yeah. Uh-huh. Uh-huh. It would make sense to look for a short setup on as of US, but but to tread with a lot of precaution based on the price of the market is trading at relative to 12 and daily. So this is good that I'm seeing this. See, this is all legit. It's not fucking fake. Which would entail, look, this is real, man. This is like a real journey of a real upcoming trader. You know, it's like I'm I'm not a master yet, but I'm going to get there. And to be fair, I'll never be a master actually. I'll always be learning and always be looking to re-articulate however I trade like in a much better fashion. But anyway, instead of rambling on, which would entail looking for a setup to unfold from off the bat and for the market to not push lower than a certain amount of time. That's relative to the situation at hand, relative to the 1 hour, since we would want momentum to stay compact, and that is iffy territory. Yeah, because of its iffy territory. Since the market is in an area where if it pushed lower, buyers could easily step in, which is right because of how the daily setup relative to how participants have been trading like over daily 12-hour time periods. Yes, 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 yes. I like to see this a lot. I'm very happy with that because I know my head was cloudy. So anyway, look at the 4-hour. This is exactly like you see how this is like I came this like this is brilliant. This is brilliant. So yeah, so I said that you'd want to see a setup off the bat, which would make sense. I mean, look at how if I just mark up the Atan pushes relative to. I know this isn't the entirety of the in-frame chart perspective, but because the in-frame chart perspective just you're in like whatever's in this box right now of however the market is auction like, how previous pushes auction like in your in-frame chart perspective. So anyway, these would be your hand pushes. So this would be a high, low, high, push lower. I would still classify that as one. And then you got this, you got this, you got this, you got like what? Yeah, you got this, and then like this just pushed gradually to the upside, like really steadily, and then momentum picked up. You got this big trend to the downside, so this would be your trend for low high, and it pushes lower. I would then classify this as the high, and then this would be the lower, and then this is just your trend to the upside. So this is your previous at-hand push, which then became done. But look at how the candle quantity of this push, and then how the market then started to auction like based on how also however many time durations the push had pushed to the upside in as of the point in time it traded above this high, meaning like the push was overextended as of the point in time it pushed above this high, and then the way participants started to trade like after that and contributed to the way the overall at-hand push was set up was of the sort that suggested that the push was done. And look at the trajectory. There was like an inflection point about here. Even kind of here, so like here you got this wick rejection, but on an existing healthy candle quantity push to the upside, its angle was fading to be fair about here, so it was pushing up, and its angle started to fade. Wick rejection, you would kind of want to see how the next bar closes like to suggest what's likely to happen relative to the initial time frame chart perspective. And then you've kind of just got this newly emerging push, which is not a sufficient candle quantity and therefore is likely to keep expanding lower to become a healthy candle quantity push relative to previous at-hand pushes, and then more so based on the momentum and how next step higher timeframes are set up as of the most recent bar close, that is likely to be the case. And it just, the way participants have traded like in this area, being at the overextended region of the 2 hour previous at-hand push, set up this push to be set up of the sort where it's not likely to be done pushing. So like they trade lower, trade higher, trade lower, trade higher. Yeah, they haven't traded the push. They haven't traded in the way over the past 2 hour time durations that have set up this push that have directly contributed to the way that the 2 hour push to the downside is set up, of the sort that would suggest it's done. So yeah, like a lot of it is also just eyeballed too, I have to say. Like a lot of what I do, I could just eyeball this and be like, yeah, okay, it's likely to keep pushing lower, you know? But I also like to dissect exactly what it is I do, just so so I've got utmost clarity. God, this is tiresome. Hold the current quantity push to the upside. They sat right at the very highs of, you definitely wouldn't want to buy here. It easily could retrace, and then the way it started to trade like in this region suggested that the retrace was in play, and overall it looks like it's actually going to come down to about here, just based on my eyes and how it's set up, you know. Yeah, about here, maybe about there-ish at least. Did it push there? Yeah, it did. So yeah, you'd now want to see how the 1 hour set up. So we're doing the 20th, weren't we? Yeah. Oh wow. Yeah, so you would just not want to see like the market trade beneath. You would want the bearishness to stay compact up to about this point here. So I'm using my complete experience here, just based on how this push is structured, like and what's there to deal with that relative to the situation at hand, of how market participants have traded like over the past 1 hour time periods and directly dictated the way the chart's set up, and as a result, where within the structure I would not want to see the market push to in regards of a price relative to the structure that like would then like be like, yeah, okay, we don't want to get involved any longer, because like the where the market's situated relative to the daily, it could easily buyers could easily step in basically. And yeah, I would say about these double lows right here. And then just off the bat look for an intra-session liquidity sweep. So that's what we'd be doing. But then, because of what I was just saying, to look for it to enhance your trade frequency, just don't look for the intra-session liquidity sweep, right? And what do you know? That is actually pretty interesting. But you'd like Because like with the intercession liquidity sweep, we've got a really good stop loss point. Because like for example, like if the market did trade above here and then like it fucking structures around and then like you get an entry, you got a brilliant stop loss placement. Like you can't go wrong. But with not, it is a little bit more iffy. And you know, you really wouldn't want to stop that big. Oh god. Jesus. See, this is the hard part because like if you don't look for the intercession liquidity sweep, you're gonna have a way harder time of stop loss placement because like even if for example the market then from London traded above Frankfurt, fucked around, gave a setup. Basically, the angle off this push to the upside started to become done. Participants, the way they started to trade, like so their intent displayed suggested that like they were no longer willing to continue trading the price to the upside, and then the way participants then started to trade like within the way bars closed amongst the way previously participants had traded, like set the push up in a fashion where it was likely to be done pushing. And then if an atomic bar close forms, uh, you would enter, right? But then you would be entering somewhere about here and you'd have a clear stop loss placement because it's already took liquidity. Like that, like, like participants have already traded above a key high, you know? So then you can just maybe stick your stop even about here. And then you've still got an amazing risk to reward ratio. But I guess you can also, like, do your stop loss placement in like with context to the playable range that you've got to play. Because if that's your playable range, I mean, you're kind of laughing to be fair for a 1-to-1, and you could still have your stop up here. So I guess that is also what you can do. So to be fair, oh god, I mean structurally, I would probably want it there, but logically, based on like how a liquidity sweep could easily happen, I'd probably want to add an extra couple of an extra 10 pips. So I probably want it about there to be fair. And then I'd probably go something like that to be fair. If I was doing the method I've just explained, where like you don't look for a thingy, and I mean you get a win, but it's like it's not about that. It's like because that's unknown. It's like how would you deal with the situation at hand? That's most important, and decide on that because the reality is you just need to be able to pretty much with this structure get a 1-to-1 with your take profit being around this region, I would say. So therefore you could still have a stop loss of anywhere from this point, and that is quite a lot of room to be fair. And what's the ATR? So the average true range, if we just look at the average true range of the last 25 bars, that's not really sufficient. You would probably want to do 40. Yeah, that's better. So the average true range has been 44. So that's not that much at all. So therefore, yeah, to be fair, based on that, I would probably pull my stop about there. And then just go for a 1-to-1 like that. I'll always go for a 1-to-1s. Like I'm happy with that, risking 2% to make 2 or lose 2. So yeah, there we go. That's the solution of what I've came up with, and naturally encapsulates all the other entries that I will have previously taken, which have led to, which has led to me having so much success, since I found this flow-based approach. So yeah, quick little breakdown of how the market's set up for US session. Look at the 4-day, bro. Jesus. The 4-day bar is already well expanded lower. That's not really what you want to see. Because like the anatomy of a bar, or the tendency of the anatomy of a bar, I should say, because the anatomy of a bar is simply what it is. the open, high, low, close. That's the anatomy what comprises a candlestick, right? An open, high, low, close candlestick, I should say. Now, the tendencies, what typically tend to happen is like if you get a bar open and then it really heavily wicks to the upside in the first like in the off like right out of the gate, it tends to go in the opposite direction, right? So like, and that's actually what you would want to see for shorts. Like you would want it immediately out of the gate. You'd want to see a big rally higher, basically trick people in the on the opposing side, and then for the real direction to form, basically forming the anatomy of the bar, forming its top wick. You could assess whether that's indeed likely to unfold based on how next step lower time frames are set up and whether they point towards potentially pushing to the upside off the bat of the 4-hour bar closing such as it did, suggesting that the relative to 4-hour time durations, the intent to trade is likely to primarily push to the downside, but the anatomy of that bar can still form, like forming its top side wick and then pushing lower. But because it forms straight, like wick low and then like this, see, that's what I would suggest. So you form the wick really quick off the bat, and then you're starting to pull up already, and then look at the structure of this push. Look how overextended it is. I mean, even on the next bar close, even if it created like a wick and then close like this, to be fair, that would look good. But I still don't think that the trend is done to the downside over high time frame durations. Like, I mean, the weekly, like, look at the 1 hour too. It's just like chilling at the lows. Like, the weekly still looks good to keep pushing. It doesn't look like it's going to be done off this next. It looks like there's going to be a few more bars that form to contribute to the way that this push to actually contribute to this push actually becoming structured in the fashion that would suggest that it would be done. It's not likely to be done yet. It really does not look like that. The angle just looks like it's going to keep pushing lower, and therefore there's plenty more time relative to bar closes before the push can start to set up in a way that would suggest the trend's done. Look at that too. The support region. Oops. Like if you just pull it like that. Yeah, look at that, man. And then if you maybe pull it about there. Yeah, it looks like... So it's pushing into a POI region, right? And how the push to this region relative to the weekly is off the sort of a healthy candle quantity and a sufficient candle quantity push, sufficient bar quality per each bar comprised within the push to the downside. But ultimately, how is the push structured as of the most recent bar close, or which, like, let's just say that it's like as of the most recent bar that's near to close of the initial entry. So like this bar's close to being done, right? So and it like how is the push itself set up as of pushing to the POI region? It's not set up of the sort that would suggest a push that's done pushing. Relative to the weekly, of course, because of next step lower time frames. Oh, not the 4D. Oh god. Well, that's kind of not really of use, I would say, because it's kind of a critical time, I would say, actually, for the... Well, the 3D does not look done whatsoever. But just the way that the bar's already starting to form, like, off the bat, it's given us, like... like, the trend's still down, don't get us wrong, but, like, it looks like it could potentially be nearing to an end, but, like, even just overall, like, the overall daily, like track my cursor... It's just angled straight for lower, But anyway, like, if you just go off this, so yeah, it looks like it's gonna keep pushing lower. 2-day, it looks like it's gonna keep pushing lower. Daily, it looks like it's gonna keep pushing lower. 16-hour, looks like it's probably gonna keep pushing lower, but that wick rejection's giving us iffy vibes based on how this push is structured compared to the previous Atan push, previous like Atan 16-hour trend, like and the durations of each bar comprised within the previous 16-hour trend, how that compares to this trend, like because this is most recently how traders were trading, like, right? So like that's like the information most recently, like, of use, how recent traders trade, like, and like I mean that was to the upside though, but hang on, let us just kind of think here instead of just spitting out words. Yeah, so the way market participants had been recently trading, like, and facilitating the market to auction, like, is like recently is the most likely participants that are now operating and how they're likely to trade, like, but like I wouldn't say this holds much significance. Yeah, it's good to I like see, okay, how does this kind of quantity compare to this kind of quantity of the in-play arm push, and but like to be fair, I mean, it, this is a big wick rejection to be fair, but the angle is still pointed lower, you know, and then also with how 40 that does not look done pushing. But it's sat right at the very lows. It just looks like it's going to keep extending lower though. Same with the 2D. Like, it just looks like it's going to keep extending lower. But it is an iffy territory where you want to keep track of bar by bar closes. Because, like, it's very overextended. Daily. Just looks like this is a new push, likely to keep pushing lower. Fucking hell, this is iffy. Like, look at this kind of quantity of this push compared to this push. I mean, there's been a lot more sufficient quality to the downside, more intent to trade to the downside than there is upside for sure. And look at the overall angle too. It's just directed straight lower. Oh wow, look at the 12 too. But like the thing is, you can get situations where, like, hang on, let me just push. Yeah, look at the angle. So like, they've traded it lower, traded it higher. What tends to happen here though is like where like you've got where like all of the time frames are bearish. Like, I'm emulating this bar, right? So like you have your push, like you have your open, you push up, you push lower, and then you push up, and then you kind of bearish, and then you just continue lower and going for this low, aka here, right? So that's also based on how next step lower time frames are set up and whether that suggests it's gonna be an iffy one. Like, I mean, look at the angle. The thing is, though, when it's not, oh, look at that. That looks. See, that backs up what I was just saying is likely to happen if this bar closes like this. Yeah, that looks really good. But you also have to be aware of where amongst the four, like, overall trend relative to intraday time frame chart perspectives that you're situated at, which I use a fib to help me identify that, to help see, okay, where amongst the four, like, trend and its existing setup state of how set up like as of now, the market's trading at relative prices and how participants are likely to trade with those prices, like based on how they previously have done so, and that's contributed to however the past, like however the chart perspective trend is set up, like structural wise, its angle, and the way the most recent bar close, like overall contributing to the structure and angle it pushes, pushing in how it's likely to persist. Now we're sat right at the very lows in reaction territory, but like, well, that's obviously contingent upon whether the push sets up itself of that fashion. And well, that looks really good if it closes like that anyway. So yeah, just based on where you are, right? Like, what's that? 7. Yeah. So based on where you are, oh fuck no, this is iffy. Yeah, okay. So based on how the market is setting up and how you do have a wick rejection right at the very lows, even though this is set up like this, you would still want to see a nice 1 hour bar close again off the bat in this region. Yeah, as are 3. So basically what I'm looking for, and it's very likely that it's just gonna drop lower, but like, I mean, is what it is. But just based on how like the chart is setting up here and how you got like a, I mean, to be fair, there's like, yeah, just on where you are, where within like, where this current in play hand push spans over the previous range, it's well below the low, and then you got like a wick rejection, and then the 12-hour, you kind of got the same thing ish, but the angle is still sloped for lower, but like it's at the very lows and it is overextended, so you do want to be careful with this. Like its angle doesn't look done, but like with however bars subsequently close, like however they do, which is kind of iffy relative to the 16 hour and 12. Relative to the daily, it's likely that'll push lower. Relative to 4 hour, the same, and 2 day, the same. But just over this little time period in the course of the day, and how these lower time frames are set up, and therefore the way participants are likely to trade like over a shorter time period relative to the lower time frames, like the 12, the 16, that's lower than the daily, is set up the push of the sort of where like you would want to be careful. I mean, yeah, it's coming back up now. Like, oh, we know this is the 12 hour. God. But then if you look at this, look how like overextended it is, and you're right at the very lows. And like if you pull the fib to see where you're trading relative to the 8 hour, yeah, okay, it's poised to push lower, but it's like it could easily retrace. You know, it could easily retrace. So, fuck's the 8 hour. Yeah. Yeah, and you're sat right at the lows. It's like, yeah, it looks good to keep pushing lower, to be fair. Like, even the trajectory just angled straight lower. But then also with how the 12, yeah, okay, so here we go. So then also based on how the 12-hour set up and how the 16-hour set up, whilst the 8 hours sat right at the very lows with a wick rejection on the 16-hour 12, definitely want to be careful, like, for sure, for sure. So, yeah, okay, the 4 hours sat right at the lows of its at hand, push to the downside, which would be from this high, but I'm just marking up the overall. Actually, I'll mark up the at hand. Kind of makes sense, more sense. Just based on the structure, you know, you got high, low, like, I'll just track my cursor, but... And this push doesn't look done based on how the next step lower time frames are set up and how indeed the 16 hours likely to push, like, so because the 16 hour and 12 hours iffy, and then the next step lower time frames how they're set up is showing how indeed the market's likely to push, like, over a shorter time period, because the 16 hour, like, if it's iffy relative to its time frame, you want to see how next step lower time frames are set up, because they, like, dictate however they're set up dictates a direction that's likely to pan out relative to their time frames. And if their time frames are a shorter time duration than the 16 hour, well, then that showcases how the 16 hours likely to pan out whichever side of the iffiness, which can either be bearish or bullish, and in this case it's bearish. But because you're at the very low still of, like, many time frame chart perspectives, trends, you know, like, the intent can easily flip. It's likely to not, and it's likely to just keep flowing with the trend. But, right, relative to the direction the at hand push is primarily pushing in terms of consecutive, like, movements over the same time periods or one after the other, and tracking the strength of the intent facilitating that trend, it is likely to keep pushing lower. Ooh, yeah, look at the 2 hours, sorry. Stressful. Okay, so what I want to see... You don't really have a playable range either, though, that's the thing, you know? Like, you... Oh my god. See how iffy this is? Like, I've not had to deal with market conditions like this before. I know it's... Yeah, this looks like it's going to go for the low. I'm just visualising if I was in a short right now, would I be happy, like, with not having waiting for a setup? I mean, I don't think I would. Look where the market's trading. It's like right here. It's at lows of an atom push that's pushed below the previous atom push's range. It's overextended. It's starting to set up with wick rejection at the very lows. You know, like, the daily's well overextended. The 8 hours too. Yeah, I want to see the 1 hour setup, right, to be fair. I mean, look at the 2 hour. Look how you're at the very lows. I really think it's the right thing to do to just wait for the 1 hour setup. I mean, the daily's already pushed, you know, that's the thing. It's like, yeah, this push doesn't have done it all, but look at this. 16 hour. So yeah, the 12 hour, it's like a healthy candle quantity push to the downside. Its angle sloped for lower. But based on its candle quantity and where it's spanning and trading, like, below the low, it is iffy. It's like, it's like... God. Yeah, so you're right at the very lows, but it is set up to go lower. So yeah, just look at the 4 hour 2. You see it's at the very lows. It is likely to take hold, but because you're at the very lows, yeah. So because you're at the very lows, you do want to see the 1 hour setup, and where I would want to see it set up like is I'd like to see a push above here, and then probably a 1 hour wick rejection. That's previous 4 hours high. I mean, yeah, look. It's just because of how the next step lower time frames are set up that's influencing me wanting to get short right off the bat. You know, it's like, but then also it's like, okay, well, look at the 4 day. It's likely to just drop off a cliff, and then, but then again, you don't sell the lows of it already push, like push. This is fucking iffy. Right, so you would uncover this iffiness based on how next step lower time frames are set up. It's set up would push lower, but because of where you are within this push to the downside, you're at the very lows. As a result, you would still want to tread with precautionary measures. It's easy for me to say, isn't it? Especially in these stressful times. Yeah, like look, yeah, the very lows, man. It is likely to push lower, but yeah, there we go. It concluded. We do want to see a 1 hour bar close at this region. So basically, yeah, and maybe it's actually around this area, about the 0.7 region, and so something like this. So a push above to here, a nice wick rejection somewhere, hopefully in that region, and then look for a 15M setup. So there's EU done. I'm going to do a separate video for GU. Wow.